This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, world stocks fell from the previous session's highs on renewed caution over the pace of an economic recovery. Analysts say investors' concerns are mounting about the impact of rising coronavirus infections from the Delta variant. Now, the MSCI Emerging Market Stock Index lost 0.5% on the day. That's its most in 2 weeks. South Africa's JSE closed lower in line with world markets. All indices were down today. The resource and industrial indices fell by the most, both down by over 8%. Meanwhile, Egypt's blue chip index ended 0.4% higher, with Fori for banking, technology, and electronic leading those gains. Egypt's stock market received some support as the government announced its plans to consider IPOs of public companies by the end of the year. Now, also coming up on today's show, Nigeria's trade deficit hits a record $14 billion in the first half of this year. Bitcoin crashes to its lowest level in nearly a month on the first day as El Salvador's legal tender. And Africa's largest supermarket beats the odds and posts impressive full-year results. Now, the Dubai Gold and Commodities Exchange and Zimbabwe's Victoria Falls Stock Exchange, have signed a memorandum of understanding that may lead to the establishment of a gold market in the African nation. Now, VFEC's Chief Executive Officer, Justin Bugoni, says Zimbabwe wants to open the exchange in a bid to create a reference market that will see miners offered competitive prices. Now, according to last year's report from International Crisis Group, more than $1.5 billion of gold is smuggled out of Zimbabwe every year, much of it to Dubai. An exchange could certainly make it easier to sell the metal legally. And heading to Nigeria now, the country's trade deficit hit a record $14 billion in the first half of 2021. That is according to the country's National Bureau of Statistics. It is by far the highest trade deficit recorded by Nigeria in any half-year periods, further piling a pressure on the country's foreign exchange position that, of course, has been hit hard by the pandemic. Here's CGTN's Deji Bademosi with more on that story.
One thing is very clear from the half-year foreign trade report of the National Bureau of Statistics. Nigeria is still very much an import-dependent country. And this is despite all the efforts of the government at weaning Nigerians away from imports. The report is a clear indication of how much effort the government still needs to put in order to address the country's balance of trade challenge.
In the first half of 2020, we had a trade deficit of 2.25 trillion. In the second half of 2020, we had a trade deficit of 5.12 trillion. Now we are talking about the first half of 2021, a trade deficit of 5.81 trillion. So the trend has been fairly consistent, and it also continues to demonstrate the fact that the economy is still highly import dependent. We are not exporting enough. We are importing a lot.
Nigeria's total export for the first half of the year was put at $19.4 billion, with crude oil alone accounting for more than half of that figure. On the other hand, total import within the same period amounted to about $33.5 billion. And top on the import list are refined petrol, wheat and used vehicles.
If you look at the second quarter of this year, where total import was about 6.95 trillion naira, it simply means we spent about 1.1 trillion naira to import petroleum products in the 3 months of April to June 2021.
The country is currently rehabilitating 2 of its refineries in order to at least cut down on refined petrol imports. There's also the Dangote refinery, which is expected to come on stream early next year, and has been touted to end petrol imports in the country.
So if you have the refineries fully in place, you see a reduction in the importation of petroleum products, you see a reduction in the importation of fertilizer, you see a reduction in the importation of petrochemical materials, most of which are used by our factories. In addition to that, we're also likely to see an improvement in our exports. So both on the export side, import substitution side, and the reduction in imports, we're likely to have a significant improvement in our balance of payment position when the Dangote refinery comes on stream and when we're also able to fix our existing refineries.
With rising importation, the country's reserve is coming under increasing pressure. Biting for a scarcity has seen the value of the local currency continue to depreciate.
We don't have so much of capital importation coming in. We don't have so much of the external remittance coming in. So net-net, we are now reporting negative balance of payments. And the part of it that should have used to moderate that for us, which the balance of trade is also now negative.
It's a tough situation for the country, one the government says it is determined to address. But there's certainly no quick fix to it. Deji Badimosi, CGTN, Lagos, Nigeria.
Meanwhile, South Africa's economy grew 1.2% in the second quarter of 2021. It is the fourth consecutive quarter of growth for the nation. While this is positive news, the economy still remains 1.4% smaller than it was before COVID-19. Here's Sumitra Naidu with more.
Transportation, communication and agriculture were the big gainers, helping to lift second quarter GDP. Growth ticked up 1.2% between April and June from a revised 1% between January and March.
I think second quarter data was encouraging in the sense that quite a couple of sectors did report some positive growth, which is good. However, it was a bit difficult to forecast given that we had the huge benchmarking and rebasing exercise that the results were just published a while ago.
The economy is usually rebased every 5 years to give a better assessment of goods and services. South Africa's economy is now up 11% at $370 billion, still behind Nigeria's $432 billion.
This time around, we had quite a significant upward revision to the overall size of the economy. You'll recall that for the average period of 5 years, I think it was about 9.5% bigger, but for the last year, 2020, it was 11.3% bigger. So the size of the economy is bigger. However, the growth rate from year to year did not differ a lot. So the trend as to what we experience in terms of activity has not changed.
South Africa's growth is still coming off a low base after a massive contraction due to COVID and the subsequent lockdown restrictions. The growth is also not enough to stem rising unemployment that was a problem before COVID.
Unfortunately, the secondary sector, which contains things like, for example, manufacturing, that sector is under pressure and it actually contracted in the second quarter. That's the sector where we need economic growth because that is the sector where we can potentially reduce unemployment as well.
The impact of the recent rioting and looting that caused enormous damage to business and property is likely to dent this current growth momentum.
We also know that commodity prices have softened relative to the first half of the year. That was, one of the key drivers of quite a stellar performance in the mining sector, and that's also likely to soften going into the second half of the year. We know that medical experts are also suggesting that we may hit a fourth wave of COVID-19 infections come November this year, and that may lead government to increase the restrictions on economic activity.
Most quarters are celebrating these numbers, but many economists are urging government to do more about structural reforms in order to boost growth and create employment opportunities. Sumitra Naidu, CGTN, Johannesburg, South Africa.
Well, let's move on now. Regional Financial Services Group, IEM, announced a 33% increase in after-tax profit for its 2021 half-year financial results. Now, within the period, the group's total assets recorded growth of 12%, bolstered by its expansion into Uganda and, of course, increased private and public sector lending. Now, net non-performing loans reduced by 8%. That's compared to June 2020. After the bank says it strengthened remedial actions in improving its loan book quality. Now, the period under review saw the group finalize the acquisition of a 90% shareholding in Uganda's Orient Bank, a move which it says is part of its broader regional expansion. Well, let's now get more insight into the story behind these numbers. We are joined by IEM Bank's Regional Director, Chris Lowe. He joins us in the United Kingdom. Great to have you with us today, Mr. Lowe. Now, it certainly looks like the sector is slowly getting back on track after quite a tough year in 2020. We saw after-tax profit up 33%, non-performing loans down 8% in those half-year financial results. How did the bank weather the storm? What are the key drivers that led to these numbers?
Thank you and good evening. It's great to be here with you. Let me start by saying a lot of focus across the region has gone into working with our clients, particularly in the stressed sectors, hospitality and tourism, we all know has been particularly hard hit. And it's been a willingness on both parties to work together on restructuring, looking at pricing, and seeing where we can support them. That to me has been a critical ingredient to why we're coming out of the current impact of pandemic in a strong way. Further to that, as a group across our footprint in East Africa, we've focused on ensuring we've got good liquidity. Good liquidity then enables us to pass on better pricing to our clients because our cost of funds are less. And obviously, we've had to maintain robust capital during that period. We've also invested quite heavily during the period. So on one side, we're putting money into digitization of our services, solutions, and distribution capability, while on the other side, we've cut back on unnecessary expenditure to keep overall costs down. We've also had, as you've already mentioned, the benefit of Uganda coming on board. We can talk about that. And Mauritius also turned the corner after a very difficult year last year on account of some lending that went bad. So those factors have all come together to enable us to achieve the 33% increase in post-tax profits. And from an NPA perspective, we've also been able to manage that through restructurings and in some cases some recoveries.
Well, delving further into your investments, let's start off with that acquisition of a 90% stake in Uganda's Orient Bank. Take us through how you plan to expand the bank's operations that are already in Uganda. How do you expect that acquisition to impact those operations and, of course, your bottom line going forward?
So Uganda has been a missing country within our East African footprint. So we're very pleased that as at 30th of April, the regulatory approvals were all through and the deal was signed with the exiting shareholders. Today, Orient Bank is number 12 on a number of measures. We have 14 branches, 22 ATMs, a full-time employee headcount of about 340 people. And a customer base of a little over 70,000. So it's a mid-sized bank, considerably smaller than our Kenyan operation. And looking forward, we've got high hopes to move that business to being a top 5 bank in Uganda. That's going to require considerable investment in technology. We're looking at not only important aspects such as cyber security, We're also looking at whether we put Orient Bank onto the same platform that we use across the rest of our footprint, because that then eases rollout of new solution technology that we're using already in Kenya, Rwanda, and Tanzania. We're also working closely as a group, because we really see the regional opportunity, whether that's at a corporate banking, whether that's at a SME level, or whether that's a retail level, as a huge opportunity. And we already have a number of accounts that have moved to us from other banks by virtue of our presence across East Africa. So today, contribution to our bottom line, very small. Looking forward, I'd like to think that Uganda will move to perhaps 5% of group's bottom line, 5% of the group's balance sheet within the next 5 years. It's a competitive market. It's an exciting market with a lot of opportunity. And we therefore are very pleased that we've been able to close the deal and start the process of integrating that business into IEM Group.
Well, you talked a little bit about this, but looking at your overall operations, you say you've made significant investments in new systems, as well as plans to focus on a series of products and innovations across all segments of the business. So give us more insight into that, and how much a digital strategy will drive this.
Okay, digital will drive a lot of it, but as a starting point, we've been investing heavily in the robustness of our infrastructure, the main core platforms that we use in cybersecurity and other supportive systems, to ensuring that our clients are protected and that we are not subject to potential hacks and all of that. With that now substantially in place, obviously not in Uganda, as I said, but substantially in place with Rwanda, Tanzania, and Kenya, we are starting to roll out capability across the board. Probably the biggest win for us this year has been the launch of a significantly upgraded internet banking platform for our corporates, which in due course will be rolled out to our SME clients. And just last week, we announced to our personal banking customers that our new banking app is available for download and transferring across. So that's what I would call our relatively plain vanilla investments, but they all take time, money, and effort to get in place. And we are now pushing hard into partnerships with MNOs, with agency banking providers, and with other suppliers of lending, micro-lending, savings, micro-insurance. And indeed today at the investors presentation, I mentioned WhatsApp banking, which is live in Rwanda and Tanzania and gaining some good momentum. We're hopeful CBK and Kenya will give us the required approvals so we can launch here too. We also have a linkage with an agency banking partner called SPEN, who have brought to the table, for example, in Rwanda, over 300,000 customers that we can add to our retail base there. And we're looking at some other developments along SME to marry into that platform. And then in Tanzania, we've got into partnership with Airtel and a company called Yabex to provide at the bottom end of the market small mobile loans. Again, not new, but really looking to experiment and work out how best to originate new retail business, which has not really been our focus to date. We're very keen to diversify our customer base, and on the top of that, we will do that through diversified solutions and services, primarily digitally provided, as I've described.
Well, speaking of micro-lending and small and medium enterprises, we know the bank will be receiving, or you have received, a $50 million long-term loan from the International Finance Corporation. Now, you say you plan to use it to expand lending to the small and medium sized business sector. Give us a sense of how you plan to roll out that plan and where exactly.
So again, I mentioned this morning that our core plans have been launched in Rwanda initially. And that's off the back of the fact that we worked with IFC pre-pandemic days, so 2009, with them and some specialist advisors to build a better market knowledge of what's needed. And obviously pandemic postponed the launch. We then launched that earlier this year. And that's been growing very nicely, over 1,000 new customers in the last 6 months, and a real appetite to bring both loans and savings to the market. In Kenya, we already have a substantive customer base in the SME space of around 30,000 customers. Not all of those are as active as we'd like, probably because we've not really thought through their needs as well as we should do. And an exercise under the leadership of a new head of personal and business banking has been completed now. And in the coming weeks and months, we will start to roll out those solutions, some of which will then dip into the IFC lending that we've been provided. So it's still relatively early days, but we've got some rubber on the road in Rwanda, and we've got a clear game plan for Kenya and Tanzania. Uganda already has a reasonable customer base of SME, and they will benefit from the learnings in other countries as we scale and replicate across the region.
Well, many thanks for your insights, Mr. Lowe. We'll certainly be watching. That, of course, is Chris Lowe, IEM Bank's Regional Director, joining us there in Lisbon. And now look at today's corporate headlines. Nigeria's largest telecoms firm, MTN, has retained its position as the largest borrower on the stock exchange. That's after it reported a total short and long-term loan balance of $1.4 billion as of June 2021. Now, closest to MTN in relying on debt to boost earnings and operations is Nestle Nigeria. And the European Commission has cleared a joint venture between Safaricom and its parent firm, Vodafone, for an Ethiopia entry after initially announcing plans to scrutinize it over competition concerns. Now, firms operating within the EU require mandatory clearance from the bloc's watchdog for a range of activities, including acquiring other businesses and setting joint ventures in other markets they operate in. And Kenya Airways employees will remain on pay cuts, at least in the short term, as part of cost-cutting measures. Now, the cuts will target workers earning $400 and above and is aimed at preserving funds amid unrelenting COVID-19 woes. KQ says strict travel rules means it will require a bailout to stay afloat. And a U.S. judge, Morgan Zern, says Boeing's board of directors must face a lawsuit from shareholders over 2 fatal crashes involving its 737 MAX plane. Zern adds that the first crash was a red flag about a key safety system on the aircraft that the board shouldn't have ignored. Now, the crashes in Indonesia and Ethiopia in 2018 and 2019, respectively, killed a combined 346 people, leading to the 737 MAX being grounded worldwide. And that's a look at our corporate headlines. Well, let's head into a short break now, still coming up on the show. We catch up with this year's winner of the Africa Food Prize for bolstering food security in sub-Saharan Africa. And Ghanaian businesses struggle as the cedi further weakens against the dollar.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business, only on CGTN.
Every story starts out like this.
beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra Nairobi. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business. Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN. Welcome back. And heading to Egypt now, the country said that it plans to increase the returns of the Suez Canal by 5.6% in the 2021-2022 fiscal year. Now, authorities there say they expect earnings to rise to $6.3 billion from the $5.8 billion recorded last year. They also predict that output will surpass pre-pandemic levels. Here's CGTN's Yasser Hakim with more from Cairo.
The Suez Canal has recently recovered from the slowdown in international trade caused by the pandemic-induced disruptions. In August, the canal posted the best monthly revenue in its history of about $560 million and is taking steps to raise its annual revenue from vessels passing through the corridor.
They are developing the southern sector of the Suez Canal to increase its depth to more than 70 feet from the current 66 feet, as well as widening the canal. There are big investments being made to adopt information technology in managing the maritime traffic. There are discounts given to many vessels, especially those going to Western Europe and the US, to attract the highest number of container ships.
The canal accounts for 10% of global trade, 25% of container shipments worldwide, and 100% of container shipments between Asia and Europe. But it's not just a waterway anymore. There's the Suez Canal Economic Zone, making optimum use of the canal's global status.
The location is excellent as it links the two sides of the world and allows shipping companies to not only pass through the corridor, but to also set up facilities to provide or store their products here and export to the rest of the world. Companies will benefit from the services provided. At the zone, we are talking about incentives such as zero customs, zero value-added taxes, and 50% cut in income tax. Skilled labor is available, and there are several ports around the economic zone to facilitate transport of goods to the rest of the world, especially Middle East and Africa, as well as a developed local transport system.
China is the first country to build an industrial city in the Suez Canal. It hosts over 115 Chinese factories and plants. The success of the Chinese model has prompted several countries to sign up. The latest are Russia and Poland. But there are still challenges facing foreign investors, and the government is tackling these issues.
There are still many problems with red tape. The Minister of Planning announced they will begin steps for digital transformation to ease the paperwork, bureaucracy, licensing procedures, and so forth for companies. It is a big problem. The second issue is to provide enough skilled workers. Unfortunately, demand is much higher than the available skilled laborers, especially in manufacturing. The government has even said it will train workers and incur all training costs and then send them to the economic zone for employment.
The Suez Canal Economic Zone as a whole has attracted $18 billion of investments in the last 5 years and expects another $1 billion by the end of 2021. The latest expansion plans and solving investor issues is aimed at reaching the target revenue of $6.3 billion in 2022 from the current $5.8 billion. Yasser Hakim for CGTN, Cairo.
Now, at the ongoing Agra Summit, the International Crops Research Institute for the Semi-Arid Tropics was awarded the 2021 Africa Food Prize for improving food security across 13 countries in sub-Saharan Africa. Now, between 2007 and 2019, ICRISAT led a collaboration of partners to deliver the Tropical Legumes Project. Now, the project has helped develop 266 improved legume varieties. They have helped over 25 million smallholder farmers become more resilient to climate change as well as pest and disease outbreaks. Well, let's find out more about the organization's work. We're joined by Dr. Chris Ojewo. He's the principal scientist at the International Crops Research Institute for the Semi-Arid Tropics in Nairobi, Kenya. Great to have you with us today, Dr. Ojewo. Now, of course, let's start with that Tropical Legumes Project. Give us more insight into this project and tell us more about how it helped millions of smallholder farmers to grow more food and also become more resilient in the face of climate change by especially providing new seed varieties.
Thank you very much. And as mentioned, my name is Chris Ojewo, working for the International Crops Research Institute for the Semi-Arid Tropics. And want to give you a quick overview of the Tropical Legumes project that started in the year 2007 with three key objectives. One is to develop and release farmer-preferred improved varieties of legumes. And the second one, basically around strengthening legume breeding capacities for faster and cost-effective delivery of targeted products. And thirdly, and most importantly, is building sustainable and inclusive seed systems that support diverse farmer-centered seed systems, as well as creating demand and raising variety awareness and delivery. Specifically, the crops that are involved since 2007 were 6 crops: groundnut, chickpea, common bean, cowpea, pigeon pea, and soybean. And the project was operating in several African countries. In Eastern Africa, we had Kenya, Uganda, Tanzania, and Ethiopia. In Southern Africa, we had Mozambique, Malawi, and Zimbabwe. In Western Africa, we had Burkina Faso, Mali, Nigeria, Ghana, and Senegal. And the varieties developed as mentioned included those of groundnut, 101 varieties, chickpea, 28, common bean, 111, cowpea, 31, pigeon pea, 23, and soybean, 10 varieties. And the area around seed production, as mentioned, about 500,000 tons, close to 500,000 tons of seed were produced through multi-stakeholder involvement of public and private sector, formal and informal, and delivered to farmers.
Right, quite an interesting project, Doctor. But the organization has also been praised for providing an inclusive approach that supports basically the whole agricultural value chain from farm to fork. Tell us more about how the organization achieved that.
Yes, ICRISAT works on a principle of science of discovery to science of delivery. The science of discovery involves the upstream levels of, particularly in this variety development, identifying what I could call crop improvement tools. Let me call them crop improvement tools for that matter, but in more technical terms, genomic tools that help us to develop the resilience of the various factors that are around climate, factors that are around pests and diseases, and also factors that are around market preferences for the farmers. So those upstream factors are developed by scientists who work in the lab and who work in the field to test the fitness of the crops for the various production elements. But also we have quite a number of scientists who are involved in product placement. Product placement in this particular case is basically taking the upstream work into the farmer's field, working closely with the farmer to get the farmer's response on his or her preferences to say, I like this, I don't like this, although you like this as a scientist, I don't like this. And if we take the farmer's advice seriously, because the farmer interacts also with the rest of the post-farm value chain actors that include traders, that include value addition, that include processing, that include export. And we need that feedback for us to be able to go back to the lab and to the field to develop varieties that will not only suit the farmer for subsistence, but also will go into the other post-farm operations and consumption, as well as other aspects of value chain actors that are not necessarily farmers but are interested participants and stakeholders.
And in line with what you just said, I'd like to get your perspective on one of the key discussion points at this year's forum, which is elevating African voices in the agricultural sector. Based on the work you have done, how do you think Africa can identify and develop African approaches to boosting the agricultural sector?
Very important aspects that Africans must develop and accept is basically breaking barriers, breaking silos, and developing what I could call strategic partnerships between public and private sector value chain actors to be able to identify where there are strengths, you make use of your strengths, and identify someone else's strengths and take advantage of that person's strengths. And not, there is no one size fits it all, but it's also no one man does everything along the whole value chain. The value chain actors need to cross-talk and feed back to each other. And with that, we are able to identify problems together rather than leave and as actors in the upstream work alone and also look for answers downstream. We have actors downstream feeding back to those upstream. But also importantly, Africans must be bold enough to be innovative. Innovation is something that requires boldness and requires making mistakes. If you've never made a mistake, then you never tried anything. So try something, make mistake, learn from those mistakes, and try something again. And that is what leads to what I call innovation and discovery. That is when you come up with something new to solve the problems of the farmers, particularly the challenges of food, nutrition, and income insecurities. So I think, one, let's be bold in innovation, but two, let us learn from what others are doing.
Right. Well, thank you so much for your insights and for joining us on the show today, Dr. Ojewo. That, of course, is Dr. Chris Ojewo, the principal scientist at the International Crops Research Institute for the Semi-Arid Tropics here in Nairobi, Kenya. Well, let's move on now to Ghana. The country's economy is trying to recover from the COVID-19 pandemic, but the depreciation of the cedi against the greenback is taking a toll on many businesses. Now, the cedi has lost more than 1.6% to the US dollar this year. That's its highest depreciation in 3 years. And some analysts are now predicting that it will fall by 3% more by the end of the year. Now, traders want the government to step up its efforts to stabilize the currency. Here's CGTN's Nabil Ahmed Rufai reporting from Accra.
Nana Owusu sells building materials. He says his business was hit hard by the COVID-19 pandemic last year.
A lot of customers hold on. We even do follow up the project we are doing at first. They said, oh, no, unless the pandemic or like we see a change in the system, without that they can come and buy the building material. So so in this case, our sales, it was not moving at all.
Now Owusu's business is starting to pick up as Ghana's economy tries to recover from the pandemic. But the prices of building materials have gone up. A bag of cement was sold at $5.80 in January. It is now selling at $8.25. Cement producers say they've had to increase the cost of their product because the prices of raw materials, which are mostly imported, have shot up. Analysts link the hike to the depreciation of the cedi against the US dollar.
If the currency depreciates, it hurts importers because now they import at a higher cost because they need more local currency to exchange for the same amount of foreign currency. And so their cost of operation goes up and they can pass that on to consumers and it makes cost of living higher.
In 2018, one cedi bought you $1. Now you need 6 to buy that same dollar. There are a number of factors at play, the biggest of which is capital flight. Investors have pulled large sums of money out of the country, concerned over its fiscal health and the government's budget deficits. Ghana has received $1 billion from the International Monetary Fund to boost its economic recovery. While this will help shore up the central bank's foreign exchange reserves, some analysts say it won't reverse the depreciation of the cedi entirely.
Whilst there is that support, you don't expect all of it to be pumped onto the market. So there's still some small room for some strategic intervention and some allowable depreciation. Then, of course, we expect the Ghana Cocoa Board to also do its annual syndicated facility, which will also bring over $1 billion into the economy. And then we also are looking forward to whether the government would be able to close or conclude its planned sustainable bond issuance before the end of this year.
Analysts say the cedi is likely to further depreciate against the US dollar, but many traders like Nana Owusu want steps taken to improve the country's economy so they can reduce the cost of doing business. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
You're watching Global Business Africa. Do stay with us. We'll be right back after the short break.
Business in Africa is at the crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
Now, El Salvador has become the first country in the world to accept Bitcoin as a legal tender, which is a milestone for cryptocurrencies. But the historic adoption got off to a bumpy start on Tuesday when Bitcoin dropped as much as 19%. In the meantime, the government-backed Bitcoin app had a technical glitch with user registrations before it was unplugged to increase server capacity. Now, besides, as our Alistair Baverstock now reports, convincing the public may not be an easy task.
More than 20 years after adopting the US dollar as its currency, El Salvador is embracing another legal tender, Bitcoin. With a dedicated app for use nationwide, President Nayib Bukele is leading his country into a new cryptocurrency economy.
This is like no currency we've seen before. There are no bills, no metal coins. Salvadorans will have an app where they can receive Bitcoin.
El Salvador is now the first country in the world to accept Bitcoin as legal tender, starting an economic and social experiment with the volatile and confusing currency. Indeed, a recent study by a leading regional university found that less than 5% of Salvadorans say they actually understand what Bitcoin is. While the dollar will remain an official currency, the addition of Bitcoin has stirred unease and sparked protests. Still, not everyone is against it.
I'm prepared to accept it because I think the president will not harm us. On the contrary, technology is there to update us. I've got the example of people selling desserts in the El Sonte beach. They haven't rejected it.
The reference to El Sonte is key. Also known as Bitcoin Beach, it's one of El Salvador's most popular tourist resorts and has been operating in Bitcoin for going on 2 years already. And Mark Falson is a travel YouTuber who visited earlier this year and saw real development potential for the wider country.
Something like 70% of citizens in El Salvador don't have access to banks. So one of the things that people have done with Bitcoin is they've gotten access to having digital money. And that means that people are able to save. They are saving money for the first time in their life. So that seems to be one of the really big advantages of bringing Bitcoin to El Salvador, is that people can have money that's not put under their mattress. And that really is literal.
As El Salvador sets out on its cryptocurrency experiment, critics and supporters alike will be watching closely the results. Alistair Baverstock, CGTN, Mexico City.
Now, moving on, as the Taliban forms its new government, those with commercial ties to Afghanistan are waiting to see what the new political and economic landscape will look like. Key exporters will be looking to maintain their market share in Afghanistan, while new players are eyeing an entry into the huge untapped mineral and industrial potential of the country. While CGTN's Ehsan Keivani analyzes the prospects for neighboring Iran.
As Taliban rule becomes a reality in Afghanistan, attention is slowly turning to the country's economic and political future under a group with a questionable reputation globally. The Taliban, whose main revenue has come from the cultivation and export of poppies and narcotics, is trying to convince the world it has changed and strives for close political and commercial ties with all countries. But what about neighboring Iran? Afghanistan has always been one of its main export markets. Over the past few decades, many Iranian manufacturers have been relying on their eastern neighbor as Western sanctions severely limited who they could sell to. In 2020, Iran exported over $1.7 billion worth of goods to Afghanistan, mainly construction materials. Considering the Taliban's traditional ways of handling monetary and budgetary systems, the Taliban can also squeeze taxes from the vast money transfer system that serves as Afghanistan's de facto banking system. Foreign trade is at risk as nobody knows what will happen to import tariffs and commercial regulations.
Due to recent developments in Afghanistan and because of insecurities which threaten merchandise, export of some commodities have dropped. We've witnessed a total of 50% decrease in our export volume. We hope commercial ties resume after the new government is established in Afghanistan because Iranian goods are popular in that country.
Optimists will hope the Taliban is true to its word that the new rulers will look to advance Afghanistan's post-war reconstruction effort. Huge quantities of building materials will be needed to be sourced in the region to develop infrastructure and get the economy moving, and international companies will also be looking to tap into Afghanistan's mineral wealth. Since late March, the beginning of the new Persian year, Iranian businesses have exported more than 5 million tons of goods, including structural steel, tiles and ceramics, detergents, and foodstuff to Afghanistan.
Iran seems ready to jump on any sign of security and stability in Afghanistan. With its low labor costs, high quality and diverse workforce, and reasonable transportation costs, Iran's manufacturing sector will feel it's better placed than most countries to take advantage. Ehsan Keivani, CGTN, Yazd, Iran.
Now, the hottest cars of the future are back on display in Germany. The world-famous IAA Auto Show has returned to an in-person format for the first time since the pandemic started. Well, our correspondent Ryan Thompson takes us there now.
It's been nearly 2 years since the world's up-and-coming cars shined under the bright lights. But after a coronavirus hiatus, Germany's world-famous auto showcase is back. Mercedes presented its luxurious EQS. BMW highlighted the engine power inside the new iX. But the real star of the show all around, electric engines.
This year's auto show is a stark change from the past. It's clear that internal combustion engines are out, and greener and cleaner mobility is very much in. 38 new electric vehicles are on display from some of the world's biggest automakers, including Volkswagen, who are showcasing how they will modernize their fleets over the next 5 years.
Actually getting there will be no easy feat. It's complicated by evolving European Union laws, a challenging supply chain transition, and ensuring that the vehicles of the future match the power of the past. Volkswagen's CEO was pressed whether the brand could accelerate its transition to electric, but said it was impossible. Brands like Daimler and BMW were facing similar questions and possible legal action from environmental groups. They say that they're not worried.
Our ambition 2039 is all about being CO2 neutral, net zero in all dimensions, supply chain, our own operations, of course the product, but also the product in use. 10 years ahead of the Paris Agreement, which is a very aggressive target for the whole business system. Now we're accelerating the product side of this, and we're going to put the company in a position whereby for the product portfolio we can go all electric by the end of the decade.
It's not just European automakers who are hoping to impress motorheads in Munich. Chinese car makers have designed impressive EV fleets at home, and now they're hoping to extend their sales into Europe. Brands like Lowe and Aura plan to launch on the continent by the middle of next year.
You don't have just like 3, 4, 5 players in the market anymore. There's just so much innovation going on, and the world is developing that fast, and this is why a Chinese origin auto manufacturer makes total sense, because they're so developed digitally and they find a very good innovative solution to other problems. So there's absolutely any kind of legitimacy to be here.
But these two brands will join a crowded field that's filled with other Chinese EV automakers that are vying for European customers' loyalty. The hope among all is that they can win over enough climate-conscious customers before European competitors make a full green transition. Ryan Thompson, CGTN, Munich.
Well, let's now turn our attention to commodity markets today. Oil prices were up, supported by a slow production restart in the U.S. Gulf of Mexico and a resumption of refining activities. But those gains were capped by a stronger dollar and growing concerns about the impact of rising coronavirus infections. Meanwhile, gold prices recovered from a 1.6% drop in the previous session. They slowly are approaching the key psychological level of $1,800 per ounce as that dollar rally paused today. Now, traders say in the shorter term expect gold to remain dependent on data and what it says about the U.S. tapering timeline going forward. On that note, let's take a short break. Do stay with us. We'll be right back.
Africa is a continent of diversity, with varied climates and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
Tunis, Cairo,
Syria,
Juba,
Johannesburg,
Ethiopia, Tanzania.
Africa Live. Find your voice.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Now, Shoprite, Africa's largest supermarket retailer, released an impressive set of full-year results despite a tumultuous year with COVID-19. The group posted an 8% rise in sales and a whopping 24.6% rise in furniture sales. While CGTN Sumitra Naidu spoke to Shoprite's CEO and filed this report.
Shoprite has always positioned itself as a low-cost, value-for-money supermarket chain. The retailer thrived during the pandemic as customers looked for just that, the basics at lower prices.
We've got very good momentum at the moment. There's good innovation all around in the business. Very pleased with the volume growth that came out, the margin that was achieved, and still staying true to ourselves in the sense that staying the lowest price supermarket in South Africa.
Just as the pandemic hit in 2020, Shoprite launched its delivery service 60/60. In just a few months, over 5 million shoppers signed up. The service is proving a major success, even as restrictions eased, allowing shoppers to return to stores. Interestingly, furniture sales jumped 25%. Shoprite also completed its review of Africa, closing up shop in Nigeria, Kenya, Uganda, and Madagascar.
We exited some of the countries, and now we are left with 10 core rest of Africa countries. Returned back to profitability. We put ourselves a short-term target of 300 to 500 million for that segment. Fourfold growth over last year, 307 million. So I think the short-term target has been reached, and we do believe that this segment can be sustainably profitable going forward.
Shoprite has close to 3,000 stores across Africa and is South Africa's largest private sector employer with 142,000 staff. The group managed to create close to 4,000 new jobs in the last year, but it did take a beating with the recent rioting and looting in Gauteng and KwaZulu-Natal.
231 stores damaged and to various extent. The biggest call out there for me is the fact that we are carrying 3,500 of our employees whose workplace has now been closed. Of those 231 stores, we've reopened 150 of them. The damage is extensive. We are insured for most of it, but there, of course, are costs like security and the staff costs that we will have to carry.
The group's gross profit was up 10%. RSA sales were up 6.9% for the year to July. Liquor trade growth dipped because of the liquor bans in South Africa. Non-RSA trade declined again, this time down 7.5% due to ongoing trading challenges, currency fluctuations and COVID restrictions. Sumitra Naidu, CGTN, Johannesburg, South Africa.
And before we leave you today, a quick look at Africa's currencies. South Africa's rand drifting lower today. It was tracking the dollar, which rose to a one-week peak on higher treasury yields. Now, early today, it traded at around 14.33 rand per dollar. That's about 0.2% weaker than its Tuesday close. Of course, the rand seems to have shrugged off domestic data releases, including better than expected second quarter GDP figures. It's mostly responding to global factors instead. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.